Hey everyone, welcome to this explainer. I am super excited to guide you through the absolute whirlwind of a year Aster DM Healthcare just had. Seriously, we're looking at a company that isn't just growing, they're literally reshaping their entire identity and their balance sheet. If you track the healthcare sector, you already know consolidation is the name of the game right now, but Aster's latest moves, yeah, they're in a completely different league.
Right off the bat, let's just look at this absolutely staggering number on the screen. A 79% jump in net profit for the quarter ended March 2026. That brings their quarterly net profit to a super impressive 154 crore rupees. But here's the kicker, you guys. This incredible leap, it's really just the tip of the iceberg. There is a massive structural story playing out behind this single metric, and we're going to dig right into it. To make sense of their dense, 8-page financial report, we've broken things down into 5 key areas today. The FY26 financial payoff, unpacking the massive dividend, core growth in India, behind the auditor's notes, and finally, the upcoming healthcare mega merger.
All right, let's kick things off with Section 1, the FY26 financial payoff. So, looking straight at the standalone financial results table here, you'll see operating profits hit 224 crore rupees for the quarter. That's up a solid 23%. And even better, their operating margins expanded, ticking up 0.75% to hit 18.95%. In a capital-intensive industry like healthcare, widening your margins while you're simultaneously expanding operations, that is the gold standard of execution right there. And this just brilliantly illustrates the bottom line for the fourth quarter. Sales surged 18% to 1,182 crore rupees, while net profit completely skyrocketed 79% to 154 crore in just a single quarter. Think about that for a second. When your profit grows at literally more than 4 times the rate of your sales, it means your underlying efficiency is firing on all cylinders. They are clearly keeping costs in check and pushing high-margin services. Moving right along to Section 2, unpacking the massive dividend. Okay, so here is the absolute game changer. Look at this colossal number, a 5,570 crore rupee exceptional dividend received from Affinity Holdings Private Limited. To put that into perspective for you, their total sales for the entire year were roughly 4,643 crore. So this single dividend injection was larger than their whole annual revenue stream. It's a massive, massive infusion of liquidity that hands them incredible strategic leverage. Now, if we look closely at the auditor's notes, we find out exactly where this cash pile came from. The note explains the strategic sale and separation of their Gulf Cooperation Council, or GCC business. By selling this Middle Eastern division to their Mauritius subsidiary, Affinity, Aster basically cashed out a huge chunk of their international equity. Why? So they could refocus all their firepower squarely on the Indian market. Oh, and fun little side note, this transaction actually triggered a corporate social responsibility obligation of over 37 crore rupees. Kind of fascinating, right? By splitting up their GCC and India entities, management placed a massive strategic bet. And as this timeline lays out, that bet unlocked tremendous value. This whole thing started back in FY 2023-24 when they decided to create 2 distinct regional entities. Fast forward to April 2024, the separation concluded, and the financial ripple effect landed right here in the FY 2025-26 report with the receipt of that 5,570 crore dividend. So this definitely wasn't an overnight pivot. It was a multi-year masterstroke to align perfectly with India's unique market dynamics. Which brings us right to Section 3, core growth in India. Even without the Gulf business in the mix, their core Indian operations are absolutely thriving. You can see it right here in this 18% leap in Q4 sales to 1,182 crore rupees. The domestic business alone is an absolute juggernaut, just generating incredibly robust cash flows. Actually, for the full year, their ratio of free cash flow from operations to operating profits stood at a remarkably healthy 94%. That is no small feat. Of course, you don't build an empire overnight. Since they started out in Kerala back in 2001, their strategy of focusing on Tier 2 and Tier 3 cities has built a massive, massive footprint. They are now the fourth largest healthcare provider in India. We're talking 19 hospitals with over 5,100 beds, supported by clinics, hundreds of pharmacies, and labs. All of this is powered by a dedicated team of over 21,500 professionals, including more than 2,500 doctors who all rally behind one simple promise: we'll treat you well. Let's dive a little deeper now into Section 4, Behind the Auditor's Notes. Here, we're looking directly at the report from Deloitte Haskins & Sells, one of the big four accounting firms. And importantly, they issued an unmodified opinion on these financial results. If you track corporate governance at all, you know an unmodified opinion is exactly what you want to see. It essentially means the auditors found the financials to be fair, accurate, and completely free of any material misstatements.
But it wasn't all just, passive accounting. The company actually responsibly recognized an impairment loss of 57.24 crore rupees because a subsidiary and an associate saw a decline in performance. They looked at the projected growth rates, realized they were coming up a bit short, and took the write-down right now. Honestly, this is a great sign of proactive management, cleaning up the balance sheet today rather than letting underperforming assets falsely inflate their numbers.
And this slide really highlights just how meticulously they are cleaning up their books across the board. They reversed a 25.41 crore provision tied to a minimum wage dispute in Kerala after some favorable legal developments. They absorbed that 57 crore impairment loss we just talked about, and crucially, they recorded 16.82 crore in one-time professional fees for an upcoming merger. They even went ahead and accounted for a 4.14 crore impact from India's new labor codes regarding gratuity and compensated absences. They are practically scrubbing the slate clean for the future. And that perfectly sets the stage for Section 5. The upcoming healthcare mega merger. So, Aster DM Healthcare India is clearly not resting on its laurels. They are currently progressing through a massive, and I mean massive merger with Blackstone-backed Quality Care India Ltd. Now, Blackstone is an absolute global titan in private equity, right? So their backing here signifies a huge consolidation of resources, scale, and operational expertise in the Indian healthcare market. The sheer momentum of this deal is wild. As you can see on this timeline, the scheme of amalgamation was submitted to the National Company Law Tribunal in December 2025. By January, the NCLT ordered the convention of meetings, and remarkably, by March 10, 2026, all necessary shareholder and unsecured trade creditor approvals were locked in with the required majority. Moving a merger of this scale through all those regulatory and shareholder hoops in just 3 months, that's a huge testament to how strongly everyone believes in this union. Naturally, if you're an investor, you've been paying very close attention to this whole transformation. You see the 79% jump in quarterly profit, that wild 5,570 crore dividend, and this impending Blackstone-backed merger. And investors are rewarding the stock for sure. Shares have risen 31% over the past year, trading at a PE of around 97. The market is definitely pricing in some significant future growth. So as we wrap up today's explainer, I want to leave you with this final thought. With their balance sheet completely fortified by the GCC sale, operations just humming at peak efficiency, and a massive Blackstone-backed merger right on the horizon, just how much higher can this healthcare giant climb? I mean, they've completely redefined their corporate structure in a single fiscal year. The real question now is how this newly consolidated entity will reshape the actual delivery of healthcare across India. Thank you so much for joining me, and definitely keep your eyes on this rapidly evolving sector.